One thing I commonly see newly retired people struggling with is figuring out what they should be withholding for taxes from Social Security, IRA distributions, and perhaps pensions. So today I just want to show you a couple of examples looking at a tax return, how you can figure out what your actual tax rate is, and how you can translate that into withholding elections. So that's what we're talking about. Let's get going. Now, there's a couple things that make figuring out the right tax withholding percentage a little bit complicated. Number one is deductions. We'll assess that more when we get into the examples. And the second issue, and maybe the bigger one, is the fact that we have a progressive tax rate system in the United States. What that means is we have multiple levels of tax brackets depending on your income. So, for example, if we take a look at the brackets for 2024, here's where they are. You can see the rates for income tax go from 10% all the way up to 37%. And the issue is most taxpayers in the U.S. end up paying a blended tax rate. Some of their income's taxed at 10, for example. Some of it's at 12. Some may be at 22, and so forth. So this makes it kind of complicated for people to figure out, when they're setting up an IRA distribution, for instance, well, how much should I really withhold from that to make sure I'm, getting it right, given that I'm going to be paying tax at these different rates. Well, we're going to see that more when we look at a couple sample tax returns. I'll show you how to calculate this for yourself. All right, let's start with an example. We're going to use Robert Johnson. He's age 62. He's single. And I'm going to go with single because almost all my other examples are always joint filers, married couples, and then people give me a hard time in the comments. Don't forget about us single people. So anyway, we're looking at Robert Johnson. He just retired, and here's going to be the composition of his income for tax year 2024. He's going to have $48,000 of IRA distributions. He's got a small pension paying $15,000 and Social Security. So if we add these all up, his total gross income is going to be $93,000. Now, he is, of course, going to be able to take at least some deductions, which we'll look at more when we take a look at a hypothetical tax return. But in the meantime, let me just point out, again, here's those federal tax rates. Robert is going to be paying a blended tax rate. Some of his income is going to be taxed at 10, some at 12, and he's even going to be paying some at 22. So, or not 2022, 22% rather. So the question that we're trying to answer today is, if we go back, what percentage from a federal income tax perspective should he have withheld on every distribution? If he's taken, say, $4,000 per month from this IRA and $2,500 per month from Social Security, what percentage of that should be withheld for federal income tax? We're going to look next at a tax return. I'll show you how to do the calculation. All right, so here's a hypothetical Form 1040, a tax return for 2024 for Robert. Here's kind of how the numbers would play out. If we come down here, you can see the various sources of income on line 4. He's got the IRA distributions, $48,000. Line 5, he's got the pension. Line 6 is Social Security. There's the gross amount. And remember, Social Security, the maximum amount that can be taxable is 85%. In other words, for everyone, they always get at least 15% of their benefits are tax-free. And that's what we're seeing here. This is 85% of his benefits, $25,500, are going to be subject to tax. Now, this adds kind of some more complexity when you think about withholding, because if some of your Social Security benefits are tax-free, well, how does that translate into what you should be withholding for federal income tax? We'll come back to that in a moment. But we add all these up, we get $88,500 for gross income, adjusted gross income on line 11. In this case, Robert's going to take a standard deduction. Remember, in the U.S., everyone has the choice to either itemize or take a standard deduction, whatever's the larger of the two. That brings your income down for tax purposes. And this is the bottom line number for Robert that is actually subject to tax, $73,900. Now, when we run that through those marginal brackets that we were looking at just previously, he's going to be paying tax at the 10% level, 12, and 22. Some is going to get taxed at each rate. The net bottom line is the total tax on his income for 2024 at the federal level is going to be $11,317. Once we have our number for where we think the tax bill is going to be for the given year, we can use that to calculate how much we should be withholding from our various sources of retirement income. For example, if we go back to where we started with Robert Johnson, again, we can see his various income sources. We want to take the tax bill, which again, in this case, we calculated to $11,317 and divide that into our gross income. That gives us a number or a percentage of a little bit over 12%. I like to think about this as the actual percentage, the actual tax rate that Robert is going to be paying relative to his gross income. And this, again, theoretically, if he withheld 12.2% from all these sources throughout the course of the calendar year, he would be perfectly withheld when he ultimately filed his tax return. All right, just a few last points here, and we'll wrap the discussion up. I want to go back to the tax return real briefly, because if you're using a past year's tax return, for instance, to make some estimates here as it relates to withholding, here's something you need to watch out for. So if we're using our bottom line number here to divide into our gross income, what you need to watch out for is using the gross income number, particularly this adjusted gross income number on line 11. The problem is sometimes income that you receive is only partially taxable. And the classic example of that is with Social Security. Take a look at our line 6A. Remember, Robert Johnson's got $30,000 of taxable benefits coming in, but only $25,500 of them, or 85%, are subject to tax. So my point is his gross income is actually $4,500 higher than this number. So my point is the gross income on your tax return can be different than your gross income in reality. Going back to this slide, okay? There are cases when parts of pensions and parts of IRA distributions are tax-free. And again, my point is that can really screw up the math if you're using those gross income numbers directly off your tax return. Now, the last thing I want to mention here is obviously when you're in the middle of a tax year, you can't use a tax return to get this bottom line number because your year isn't over. Your taxes have not been filed. But one of the reasons I illustrated the tax return is many of the retirees I work with are in situations where their income is very consistent year to year. So a very simple approach is just using the prior tax year as a baseline to do this calculation. In other words, do the calculation for 2023 as an example, and it's very likely that your actual tax rate, taxes to gross income, is going to be the same here in 2024. The obvious caveat to what I just said is if you are a person who has income that varies significantly on a year-to-year basis, especially if you're someone who has taxable investment accounts that are generating capital gains in a somewhat irregular fashion, well, in those cases, you're going to have to do an income projection to come up with a tax bill. And that's something I do with most of my clients every single year. We estimate where we think their taxes are going to be, and we'll adjust the withholdings and implement other strategies to even reduce taxes if those opportunities are there. So anyway, withholding is something I see people struggling with all the time. I hope this one was helpful. If you got any questions, please drop those in the comment section. I do read those. As always, thanks for watching. See you on the next one.